Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, July 12th, 2021. We're going to start the video with a brief overview of the broad markets and some considerations with trading right now, really in general, just about any individual stocks. I'll take a quick look at the VIX, the DJP, Dow Jones Commodity ETF, and then a few individual commodities I've been highlighting recently. We'll hit on wheat, corn. I also want to highlight what cocoa's doing, maybe soybeans, because that goes along with wheat and corn. Very brief update on gold, silver, in the US dollar, and like to hit on crude oil again and AMC. So a lot of what I've been highlighting recently, I'll stick with those. Now, as I get into the coverage of the markets here, keep two things in mind. Number one, we are in the summer doldrums. That means, trading volumes drop off. A lot of people on vacation. Myself is not, I don't force trading this time of year unless the markets are moving. So, I've cut back on my analysis and everything else because there's just not a lot. The markets have been slow grinding higher with very low volatility. We haven't had a pullback now in quite a while, so we are very extended as far as persistent overbought conditions, but with low volatility. So there's really not a trade to be made, or at least not a lot of money to be made in the broad markets. This is when you make money in these, strong ups and strong downs. Lately, we've been grinding around. The other thing to consider, take into consideration if trading lately, is we have all the market-leading FANG stocks, what I call FANGs. That's Apple, Microsoft, Amazon, Alphabet, that's Google parent company, Tesla, Facebook. They're all reporting in the next few weeks here. So in the last, it's usually about the middle to the end, through the end of this month, you're going to have just about all those market-leading stocks report. As such, anything's possible. I've seen a lot of things happen over the years. Sometimes you'll see stocks rally into earnings. Sometimes they'll sell off, but quite often, especially when valuations or conditions are overbought, at best you'll probably just chop around for a while. So the takeaway is, I'm always on alert and ready to jump on an opportunity if it comes. As of now, I'm expecting more of the same. And again, if something happens here, we get some type of, opportunity, whether it's on the equity markets or anything else, we'll jump on those. So I'll be around, but again, updates are going to pare back, at least on the broad market. Until I see some type of movement. So what we're looking at here is QQQ, primary uptrend line. Same story. This is a 60-minute chart. We've been tapping it. So, there could get some movement there if and when this breaks, because it's a pretty well-defined trend line. Could get a swift move down, and that would coincide with a sell-off, profit taking heading into earnings. There's a lot of expectations are very high. Valuations are really getting frothy now, so that's one thing to look for. So there's that minor trend line we broke last week, and we've been back testing the minor trend line, but we still are above the primary trend line in QQQ. Nothing has changed now for weeks. These negative divergences continue to build. So that's what it looks like on QQQ. You can see all these are potential price targets if and when we get a sell signal. The S&P 500 60-minute chart, SPY. Let's zoom in nice and tight. Basically, you have the same old here. You have a divergent high, and you can see, every so often that's what you get. You get these divergences. They build, and finally you get a correction. They build, you get a correction. So, looks like there's a good shot that we'll get one soon. And they're pretty steep right now. You can see the slope down here on the divergence on the RSI and the PPO. PPO is starting to roll over. Breakdown and back test right there on the SPY. Let's look at the futures, and again, we're just sticking with the 60-minute charts now. Should we start to get some movement, then we'll zoom out to the daily charts. Remember, when the markets are at or near all-time high, you don't have any overhead resistance levels. You only have support levels from below. So that's what we're going to focus on, is the next down move in the market here. Let's look at ES. These are the S&P 500 E-mini futures, 60-minute chart. And there's that most recent trend line that was taken out. There's our breakdown. We hit the 42.79-ish support right there. Bounced, back test again, and the divergence right now has only grown larger. We had divergence right here before that swoon down, and with this marginal new high There was our other divergence line. Now we have divergence here. Again on the 60-minute chart of ES. So those are your targets on ES, all potential targets. And then NQ, the Nasdaq 100 futures, that one you have a very clean, well-defined uptrend line, just like I showed you on QQQ. That's it right there, a primary uptrend line. Lots of reactions to help validate that. So therefore, my expectation, if and when it breaks, especially considering these divergences, will come on down to at least this target here, 14,066. We'll call it 067. That would be my minimum preferred swing target. I mean, I have other targets here. Those are the minimum targets, the first targets there. But this is my preferred swing target. In other words, I think we check down. We maybe have a little reaction along the way. And again, we'll just play it by ear. If and when we start to reverse trend, we'll see how the charts look to decide whether I'm going to extend a target beyond that 14,066 to any of these down below. And just as the major stock indexes have negative divergences, you have positive or bullish divergences here on the VIX volatility index, and that's often the case. So when you get these positive divergences, they usually coincide with negative divergences on the indexes, and that's usually where the VIX spikes. So you had a breakout there, you had divergence there, rally there, divergence here, rally there, and I would expect nothing less this time around. So again, these are potential targets, but you can't trade the VIX directly. You can trade futures on the VIX or options on those futures, or something like VXN or VXX is one of several. In the same thing, you're going to have the similar divergences there. I just don't have this one marked up for targets for you right now. But if you're interested, drop a note in the comment section below this post, and I'll mark this chart up with some near-term targets. And DJP, the all-inclusive or well-diversified commodity ETN, remains in this price channel here and continues to hold support at the bottom of the channel. This uptrend line, very, very well defined, goes back a long way. Still have those divergences, or we did at the last high. Again, sometimes in a bull trend, you can burn through divergences. All we can tell you, all I can say with certainty is that is support, the trend line. In the upper line, you could call it resistance, because in a price channel, that's usually how things go. But if we move up, if we take out these two highs right here, then you're at new multi-year highs on DJP, and that in itself is always bullish. But it'll still have those divergences anytime soon. Now, some of the commodities I've been highlighting recently, let's look at those in both futures and ETF versions. We have wanted to highlight wheat. Let's see, that is ZW. Let me pull that up 1 second here. Okay, here's ZW wheat futures. It was pointed out as a trade idea here a couple weeks ago. Went on, had an impulsive move up, hit the first target halfway to the second target, came back down. And this is a common theme. I'm seeing this on, I'm going to go over a few of the commodities today that I'm noticing on. What we did is we had some nice bullish setups, just like we had here. Nice bullish setup, divergent low, breakout, and it was good for a trade. Remember, this isn't a downtrend. That trade just went to this level. That was about a comparable run, and again, we put in another divergent low, and they're buying it aggressively so far today. Wheat is up. Wheat futures are up 4.11%. And also coming off oversold conditions right here. And then let's look at the wheat ETN for you. Okay, so as highlighted last week, you had wheat, this ETN, WEAT, right at trendline support, and that's what you do in a bull trend. You go long at uptrend line support. So you had the general commodity ETF or ETN that I covered earlier pull back to trendline support. You had wheat pull back, and they're buying it pretty impulsively, and that's what you do in a bull trend until and unless that trend line breaks. So you went long last week, you went long at support. No reason to not keep a relatively maybe even a little tighter stop than you might have had last week. Raise stops, but again, we should remain above that level in 610. So I'd have a stop a little bit below 610, and if it starts to move up, then periodically you'll just want to raise your stop. And again, it's quite possible this is the start of the next leg up. in a bull trend, and so longer term investors, again, you might just want to trail stops up. Some of the other ones that are associated, the grains, you have corn, same story. This isn't mere coincidence that both wheat and corn hit their identical or nearly identical trend lines at the same time. These guys tend to move together, so you had two reasons to buy corn recently on this chart, CORN, the ETN. Pull back to that 1917 support. See how many reactions we've been pulling back to that level, and the uptrend line. Nothing big so far. It's up 3% today, but if that's how you can trade it. Keep a tight stop a little bit below there, somewhat below 2, 3, 4%. So it all depends on how much you're looking for on the upside. Because if it breaks that, it's probably going to come back down here to 1744. So like any trade, you don't get married to it. Ultimately, if it can break above this recent trading range, that should be quite bullish for corn if and when that happens. So that's what it looks like on the daily chart. I'm still liking that one right now, long and bullish on corn and wheat. And then we have ZC. Let me find that for you, and that's corn futures, and that's what this looks like here. We have a little funky candlestick. Let me see if I can get rid of that. There it goes. All right, we have wash, rinse, repeat, positive divergence, just like we had positive divergence here. That's when you want to be looking to get long, and you want to be looking to take profits or get out of your longs when you have negative divergence. So that's it so far. Divergence right there, and a pullback to that 522-ish support right there, and a pretty decent move up so far in corn. Futures are up about 2.7% today, and still liking that one. And then bigger picture, as I showed you on the daily chart, this is what it looks like here on the 60-minute chart, because we're zoomed in to a shorter time frame. But there's your recent trading range. So it's simple stuff. Let's not overcomplicate trading. You buy the bottom of the range with a stop somewhat below. You can target, at minimum as a swing trader. Well, there's a lot of targets. Here's some near-term targets. You can target the top of the range or hold on for a breakout above the range if you believe these guys have more to go. And I still maintain and believe that we're in a new early stages of a new bull market in commodities. So that's helps formulate, especially my longer term positions, as well as swing trading. Swing trading, you'll catch, pullbacks to support, and the difference is I'm more apt to go long on a pullback to support than I am to short in a bull trend here. And this is ZS, soybean futures. You can see they had a spike up along with corn and wheat recently. Leg down, but they didn't make a lower low, and again some impulsive buying. So the buyers are stepping in here at least today and recently, and buying into these. They're buying this dip. So really, ideally, I showed you those trend lines on corn and wheat, those primary uptrend lines, plus price support. So on these grains, you really want them to stay above these recent lows, and as long as they are, I think they're decent longs, especially for diversified portfolio. That's why I cover things. I'll cover Bitcoin at times, which, by the way, I'll probably just do an update now that I mentioned it. I'll probably get questions on it. I've been bearish on it for a while and calling it down, but lately we've just been locked in a sideways range going nowhere. This is Bitcoin futures, BRR. So I'm not doing updates. There's nothing to update it unless we break above or below this range, and I'm still favoring more downside in the cryptos. Here, I might as well cover my GBTC chart now that we're here. So that's GBTC. Back here, put a sell signal the day after it top, went down, hit my first target zone, then hit the second target there, hit the third target to almost to the button, and then called it in for a long, hit this first target, came close to right here, it's T2, but it's kind of fizzled out, and I'm leaning towards this move down to that potential target I have there at 17 before all said and done. We'll see. I don't have strong convictions on it right now. No position in there, but just figured I'd update it. And then for Ethereum, ETCB, nope, ETCG, Grayscale Ethereum Trust. Same thing, we had this downtrend line here, hit that 2244 support bounce, and I had all these potential bounce targets. So far we've stopped at that 4113 resistance. In fact, we We're checked there 1, 2, 3, 4, 5 days in a row and rolling back down off it. Couldn't clear that, and that should open the door for a move down to this longer term target I have of this uptrend line right here. And we already hit the 2244 target, so yeah, that would be my next target there. Gold 60-minute chart, I'm still near-term bullish on gold. We had this bullish falling wedge, nice divergent low here on the 60-minute chart, ran up, almost hit, close enough to that T1, been consolidating. R1, that was formerly resistance, we took it out, so that should actually be S1 right now, meaning support 1 or first support level, and we've been holding that, so that's it. We're trading in this little range right here, and I do favor more upside to these targets listed, T2 and T3 at least. That is next target 172.86 for T2, 174.43 for T3, quite possibly more. Let's look at gold futures, GC, and that would be right about here. Let's see, I've got a ton of these little charts below. There it is. GC, same thing. You can see you're just seeing round the clock trades because these are futures. There's our bullish falling wedge. Here's our breakout. We went up, had a little minor uptrend line that broke, but we pulled back to the bottom of the R1 zone, or which is now again support. Same thing. That's where we've been moving between there. Also reversed just shy of my second target so far, and I still expect it to be hit. And so that's the next target, 1825 and change. Then T3 at 1848 or so right there. One reason I expect that to be hit, other than just that chart right there being bullish, in my opinion, is the chart of the US dollar. These are DX dollar futures, 60-minute time frame, bearish rising wedge pattern, breakdown, back test, moving lower. Just need to take out that low, and here's my target. So a falling dollar is bullish for gold typically, and that's what I'm still expecting. More downside on the dollar, more upside in gold and silver. Let's look at silver futures for you, and then we'll move on. That is SI right here, and same story, positive divergence, support right here at about 29.76 or so, and it's holding above that, and I expect to move up here to about 27.51 or so, and then 28.49. Those would be your price targets on SI silver futures. Next up, crude oil, 60-minute chart right here. Basically, we put in this high right here was a divergent high, just like that one. That one we had a little correction. Actually, we've been diverging for quite a while. So this divergent high wasn't the divergent high. It was a divergent high along the way. That divergence has continued to build and expand. And we recently started playing out. We started to see some volatility in crude with a correction down to that second target level. Bounce there, but I still favor a move down here. I think this is just the initial snapback rally with at least one more leg coming down to that T3 target. That's about 66.61. And if you don't trade futures, you like ETNs and ETFs, then you have USO. It's the crude oil ETN. That's what it looks like on the 60-minute time frame right here. You have, this is our current divergence right here. There's our divergence. We have put in a divergent high, broke that trend line. There's that same move down I just showed you on the futures. But if you look back, going back even farther, we have bigger divergence. It's been building for quite a while there. And so your targets on USO would be 45.68. 41.68 and then 39.54. Let's just focus on those for now. Let's see if we can get a half decent correction going in the crude oil. And then AMC. AMC's kind of been grinding around for a while, but we did break that triangle pattern recently. Been moving lower since. Hit my 41.72 support / target. This is a 60-minute chart here. Bounced on it, but we're back to it again. So if and when once that goes with conviction, I expect to move down here to the next target, 33.13, and then ultimately at least move down to 14.58, and quite likely more after that. These are additional potential targets. Let's just see what things look like when you get there. So it seems that the apes, they call themselves, are just drying up, and that that was bound to happen when they all go in. They band together. Sure, they strong hands. That's their motto. Don't sell, hold, hold, hold. But that doesn't work. It works in theory, but when it's a bunch of connected people on the internet don't know each other, don't care about each other's interests, they will, as this goes down, you will see people sell, you will see stops get hit, margin calls will be made, because I know a lot of people, those apes, a lot of them believe so strongly in this, they have all their money in it, and therefore they're probably leveraged on it as well. So what happens is you'll hit a point where you start to see more and more stops get hit, more and more people throw in the towel, margin calls and all that, and it should be, I would suspect, when we get down in here, maybe when we break that 33 level, say that might do the trick, a quick move down to that 1458, and that's a big drop if we get it. Remember, this is a log scaling, this chart. It might not look like much, but that's a 65% drop from where we are now if we hit that 1458 target. Okay, let's go ahead and wrap it up here. That's, again, some of the things I've been watching lately. Again, the stock market, low volatility. I'm not seeing a lot of opportunities out there, not, in other words, attractive setups with good risk-reward ratios or high profit potential. It's just low volatility, so I'm going to focus on these commodities. They do their own thing. Gold, spread it out, and short AMC if that's your kind of thing. Keep in mind, this is a very volatile stock. This thing can go up and down easily double digits in a day, so as always, pass if it's not your cup of tea. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.